Stocks see a small bounce with a positive advanced decline ratio. Utilities, energy and metals are the prominent gainers, even as IT and realty lose ground.
Shares of BPCL climb after it posts better than expected operating profits and announces the issue of one bonus share for every share held. A reduction in debt also aids sentiment.
All listed life insurers, barring HDFC Life, post a strong jump in business in April on the back of a weak base last year. LIC posts a stunning 113% jump in premiums on the back of big group business wins.
Gold perks up to over 73,000 per 10 grams on the auspicious occasion of Akshaya Tritiya, when Indians buy the bullion and jewelry with the belief that whatever is bought on the day will never diminish in value. Hello and welcome to Halftime Report on CNBC-TV18. I'm Ekta Batra and with me is Mangalam Malu. Well, it is Akshaya Tritiya and it's shining a little on the markets as well. So that's a good thing. Not that much. We can ask for more, but nonetheless, we have the Nifty, which is up around 0.3%. We have the Bank Nifty also, which is gaining, and the Midcap index. The advanced decline ratio at around 2:1. So steady gains for us, and let's see whether there's any kind of pickup towards the second half of trade. Mangalam, I guess we shouldn't be that greedy in terms of gains, considering the kind we are sitting on. But nonetheless, steady gains for us today.
Steady gains so far, but what we'll do is we'll talk about the markets in just a bit. We have the management of Asian Paints reported a weak quarter in their weak performance in their fourth quarter. The margin contracted, revenue, EBITDA both below expectations, even as volumes grew by about 10%. We caught up with Amit Singhal, the MD and CEO of Asian Paints, to discuss about the quarter gone by, but more importantly, the weakness in the consumer sentiment and the outlook for this year.
Overall, when we look at quarter four, we saw various things happening in the market. I think initially what we have seen is that the rural markets were responding a little bit better in terms of the overall thing as relative to the previous quarters to that extent. The B2B business was also doing well in terms of what we see in terms of both the builder segment, the construction segment, as well as the institutional segment in terms of what was happening. And the third is that we saw good kind of imperative coming from the industrial market, which is the auto sales and the protective sales market, in terms of which were doing quite well. And I thought we saw a little bit of a slowdown happening in March because of the elections coming to that extent, which put up a slowdown on all these parameters which I have spoken of. But in general, I think the overall demand was moderate to that extent, notwithstanding that I think we stood to our promise of a 10% volume growth in terms of what we have delivered to that extent. The value has been obviously a little bit down, one, because of the product mix in terms of what we have delivered, second, because of the price decreases which we have taken of almost about 3.6% to that extent. And I think these both factors brought the value down and a little bit in terms of affecting the margins as well.
Well, you know, you did speak about demand being affected due to elections, etc. We don't have the numbers of all the other companies, but another listed player that reported numbers, they said double digits decorative volume growth as well. What is your sense of the growth that you've posted versus the industry in the fourth quarter?
I think we would say that the volume growth would be definitely, much higher than the industry in terms of what we would have posted to that extent. The value growth might be a little bit different depending on how the percentage share of the industrial sales comes for various competitors to that extent, because the industrial sales has done much better than overall decorative to that extent. But otherwise, I think overall, from a volume perspective, we are pretty comfortable.
We speak about volume growth, and we've been speaking about it in the past as well. You've guided for the difference between volume and value to be around 5 to 6% in FY25. So from that standpoint, do you think now it becomes not a very important metric from a street standpoint to look at the volumes itself? Because that gives a very different picture versus what's reported in the profit and loss statement.
So overall, as we see, as we kind of go ahead, given the imperative of saying that there have been some decreases which have been taken, also the fact that today we must kind of take into account that the economy segment is the largest market in terms of the decorative paint industry, in terms of what it is there. And if there are imperatives happening there, the volume growth would be very, very critical to get in terms of really looking at your shares as we kind of go forward to that extent. But having said that, I think the premium premium and the luxury segments are as important. The luxury segment is also growing at a good pitch. But I think given the overall contribution both the premium and the luxury segment has, and the fact that you want to kind of outstrip the growth in terms of some sectors of the economy, I think volume would remain as a very, very big parameter as we kind of go ahead. Also, the fact that rural is expected to bounce back a little bit more in terms of 24-25. Therefore, I think the focus in terms of where companies are registering the overall volume growth would be a very, very important parameter.
We see you have increased your ad spends during this quarter. The Virat Kohli launch for Neo Bharat, the economy segment which you've been talking about right now. I just wanted your thoughts on margins. You've given a band of 18 to 20% for this year. Raw material prices, they've more or less bottomed out from what we gather from the industry so far. What are the levers for margin expansion going forward, or is there a risk from a downside standpoint? Because, then you will have all the fun and games happening in the second half of this year with competitors coming in.
So overall, as we look at it, when we look at even the economy segment, we talk of a certain gross margins in terms of our products, which are there to that extent. And that is something which is a core focus so that we don't have any margin dilution, which is happening on the overall frame, even if the economy sector grows at a slightly higher rate to that extent. But if you look at the financial year 24, we are still at the EBITDA margins of almost about 21% plus in terms of what we have delivered, which is much above the guidance in terms of what is there to that extent. And I think what we are positive that as we kind of go ahead in the year, given the mix in terms of what we intend to sell, given the focus we want to bring even on the premium and the luxury segment apart from the economy, I think we should be well above the guidance in terms of what we have kind of given for the year. And I think that's been the focus, and the gross margins have also been good to that extent. I don't see any big kind of inflation happening in the raw material prices, at least in the Q1, as we see it to that extent. And therefore, I think we are pretty positive that we should stay above the guidance.
And you are, positive about staying above the guidance, factoring in all the fun and games that will happen in the second half, right?
Absolutely. I think fun and games are part of the overall games we play to that extent. And I think we are really up to it in terms of what we want to do and what is the strategy ahead.
What about, the home care segment? That's been a bit of a pain point. Is that conscious, or is it something that you are doing to, increase it going forward, especially the bath vertical?
So overall, I've been always saying that when you look at the home decor segment, it comprises of many other categories as well. If you look at the lighting category, you look at the doors and windows, you look at the fabric category, all these categories have grown in double digits, both in Q4 as well as in the whole financial year to that extent. So the home decor category is not only about kitchen and bath to that extent, and therefore the other categories are literally fueling the growth at our Beautiful Home stores, in terms of which are now 16 number and spread across the country to that extent. But having said that, kitchen and bath has been definitely a disappointment in the last year in terms of what has been there. We have not been able to kind of really galvanize growth there, especially bath has been much slower in the market. And we're taking now corrective actions in terms of now bringing both bath and kitchen into the Asian Paints Beautiful Homes umbrella very strongly. And we feel that given the brand, given the equity, given the servicing in terms of what we can put into place, we should see a new phase of kitchen and bath going this year to that extent, so that it kind of propels the overall home decor category along with the other categories.
I have to ask you this, Samit. Usually we speak about competition, a lot has been spoken about it, so let's not speak about everything that is out there in the market so far. What's concerning from the perspective of those who hold Asian Paints shares is that, from the peak it's down about 25%. And this morning I was reading through swathes of all the brokerage notes that have come by. A lot of them have trimmed their EPS estimates, but more importantly, some of them are calling this the competitive equilibrium in the paints business being likely broken. And all of them have actually reduced the multiple at which Asian Paints would trade earlier in the market. What do you think has given?
So, as I see it, I think, the current way the quarter has gone, the value numbers, the margins, and I think people are getting definitely influenced by that in terms of what is there. I feel that time will only tell in terms of saying that I don't think so it is any competitive pressures which is kind of really looking at doing stuff in terms of what's happening. We are very clear about our strategy, which is in terms of propelling the brand, putting money behind the brand, looking at supply chain measures in terms of what we want to take, and building a relationship with the network and expanding the distribution area, putting innovation in terms of newer categories, building new categories, and so on and so forth. So I would say that I think some of these reactions are obviously coming given the behest of the quarter in terms of what's coming and the overall macro situation with competition coming in and so on and so forth. But I think going ahead, we are confident that I think we should be able to change the viewpoint as we see the further quarters coming in.
Okay, confident of beating that 18 to 20% margin guidance in FY25 as well. That's a very confident Asian Paints talking to you, Mangalam. But as of now, the stock is doing well. We need to take a short break. But it's now time to also shine a spotlight on the backbone of our economy, a celebration of your impact on India's success story. CNBC-TV18 and HSBC India proudly present India's biggest SME awards platform, honoring the small and medium enterprises that drive our nation's growth. Nominations are open now, and we invite you to become an SME champion. Your dreams power India's progress, and it's time to celebrate them. Scan the QR code and be a part of this monumental recognition at the SME Champion Awards. It's not just a platform, but an opportunity for you to step into the limelight. Welcome back. Well, steady gains for the markets. We just want to point out two stocks which are due to report their numbers, and Cipla should probably be coming out soon enough. That stock is holding up with a gain of around 2% ahead of its numbers, so it's going in strong into its numbers. So do watch out for that. It is expected to be a quarter where the US markets could possibly be impacted by competition in some key drugs such as albuterol and inhaler that they sell in the US. So that'll be important to watch out for. But separately, the other one which is doing well is Dr. Lal's, because that stock is up around 3% ahead of its numbers. So again, going into its numbers quite strong. Remember, it's trading at around 45 times 1 year forward. So that stock too is quite steady ahead of its Q4 numbers. Let's see if competition is impacting their volume and pricing, especially in key markets such as the West. But let's talk about the top gainer on the Nifty now. BPCL is surging after it reported what was a good set of fourth quarter numbers. Sunal is here to tell us more about it. Sunal.
Well, yes, it was an operational beat on BPCL. Margins improved, and that is what the street seems to like. Revenues were up 4.4% on a sequential basis. The EBITDA came in at 9,211 crore rupees, which compares with a poll of 9,016 crore rupees, so better than estimates. Margins at 7.9% compare with 2% on a sequential basis and a poll of 7.8%. Profits are also up 24% for the company this time. It was a refining miss, so largely this was led by the operational performance in the marketing segment. GRMs this time around came in at $12.4 per barrel, which compares with a poll of $17.1 per barrel. The refinery throughput, though, came in higher than estimates at 10.4 million metric tons. This compares with an estimate of 10 million metric tons. The company has announced a dividend of 21 rupees per share, and it takes the total dividend for the year to 42 rupees per share. Additionally, they've also announced a bonus of 1:1, something that the street likes. Balance sheet has improved because the net debt is down 50% on a YOY basis, and free cash flow has come in at 27,000 crore rupees. So good P&L and good balance sheet performance this time around. Morgan Stanley says that BPCL had the best outperformance this time around in terms of margin expansion, and Jefferies says that while refining was below, margins are expected to be range bound, but net debt being lower is something that they liked, and they've upgraded their FY25, FY26 earnings by 7% and 14%.
All right, so that's about BPCL. Thanks a lot for that. Let's focus on Escorts Kubota. Now the stock is higher despite a weak quarter. The company saw revenues decline and a slowdown in the tractor business, although their construction and railway businesses stable for the quarter. In fact, we spoke with Bharat Madan, who is the whole-time director and CFO of Escorts Kubota. Let's hear out what he had to say and why the street likes what he said.
So this quarter we expect, I think it will be a soft quarter for us. So we still expect to be a single-digit degrowth, which will happen in the industry numbers. So May, June may still see a slow growth. I think going forward, once the monsoon starts, if the pickup is good and distribution starts, maybe the sentiment will start improving. So July, August may be more like flattish month. September onwards, we'll see the pickup start happening. If we really see a good monsoon this time. the festive season shifted this time to April. So that actually reduced the impact of the drop. But otherwise, the sentiments were not very strong on the market side. And then coupled with the election scenario, I think some demand has been injected. So we had given a guidance the margin for tractor will continue to be in 13 to 14% range. We won't see it dipping down to single digit. All speculative. Actually, we denied that also to the stock exchanges. So there's no such news. Yes, we know Kubota is not really into the railway business globally. So it's not really a sector where they can add value. But that doesn't mean that it will be sold off. So obviously, we're looking at the right partner who can really help us in doing that business further.
Okay, so that's Escorts. But moving on to Intellect Design, sharp fall there, down around 13% for that particular company. Post a weak quarter, revenue growth declined. Reema's here with more details on the performance this time. Reema.
Thanks so much for that. So two reasons. One, the quarter was weak. And secondly, the stock had run up. So the stock in the last 1 year is up 92%. Now on to the Q4 numbers then. The revenues have fallen 3.3% quarter on quarter. And even on a year-on-year basis, it's a flat performance. The reason for the muted performance on the top line is the GEM contract, the government e-marketplace contract, the platform that the company was executed largely ended in the current quarter. So, if you just look at the GEM revenues, in Q4 of FY23, which means in the quarter of last year, they recorded about 73 crore of revenues from GEM. In Q3 of FY24, December quarter, it was about 64 crore and that dropped down to 8 crore, which is why quarter on quarter and year on year, you are seeing that dip in, the weakness in the revenue. If you strip out the GEM, revenues and the impact of that, then the company said the revenue growth would have been 13% year on year and 6% up on a quarter on quarter basis. Margins also have improved for the company. Gross margins are now at 58%. In the conference call, the company has also indicated that they were not able to, while they did close 16 deals, it was not as much as what the company was hoping for, considering the number of deals in the pipeline. About the FY25 outlook, 15% top line growth if you exclude the complete impact of the GEM contract, like to like, with margins in a range of 20 to 25%. Back to you.
Right, Reema, thanks a lot for that. That's about Intellect Design, down around 14%, and Reema told you why. Just before we slip into a short break, pull up Delivery. Delivery is a stock which is doing well in an otherwise wobbly market. Midcaps are generally doing well today, and in that, Delivery actually has recovered from the lows, currently at the high point of the gain of almost 2% from the lows itself. Take a short break. On the other side, Manish Hatiramani of Deen Dayal Investments joins in with some trading strategies. Welcome back. There's some recovery for the market, so the Nifty is higher, but what's also higher is the India VIX right now. As we speak, the India VIX has moved towards 19, so that's one level that we need to keep an eye out on, because as that progresses, the probability of the market showing wild swings increases as well. And this even as we're looking at the May series being a long one with a lot of election-related uncertainties around it as well. So just watch out for this. From the lows of about 12 days ago, the VIX is up nearly 90%. The indices, despite that, are showing some signs of recovery, 1/3% in terms of gains for all the frontline indices. Just watch out for the Nifty. After today's recovery from the lows, it's telling you that maybe the 100-day moving average, which is 21,981, is an important support from which we bounced back a little bit. And as a result of which, we've seen some of the writers pretty active at the 22,000 put. So the 22,000 put comes up for you. That's seeing some writing. And these are options that expire next week. So which is why there is a very high premium as well, 125 rupees. And at the same time, because the VIX is high, the premiums that are there are higher as well. On the way up, though, there is some resistance. The 22,100 call is trading at a premium of close to around 140, seeing a lot of open interest addition, telling you 22,200 to 22,250 may see some bit of a resistance. From individual stock standpoint, watch out for Piramal, and that may exit F&O ban after being in F&O ban for the last few days. In fact, yesterday we saw Biocon exit the F&O ban as well. So maybe it's that period of the series where some of the stocks see exits from the F&O ban.
Okay, all right. So that's what's taking place in the F&O space. We have Manish Hatiramani, who is joining in for a technical call on the markets. Manish, hi, welcome to the show. Well, steady gains for the markets today. We have a lot of stocks which are gaining. Case in point would be Hindustan Zinc, which is up 8.5%. IIFL Finance, which is up around 4%. Dr. Lal's, which is up 3.5%. So it's a whole bunch of stocks from different sectors which are seeing traction. How would you approach today?
Good afternoon, Ekta, Mangalam, and to all our viewers. Thank you so much for having me on the show. Well, I still feel that we are not out of the woods. This is more of a bounce that has happened. But I'd like to spend a couple of minutes on the Nifty. We've really paused around this 22,000 level. That could be psychological, it could be anything else. But the real number to watch out for would be 21,900 to be specific. If we do end up breaking 21,900, I feel there could be a further carnage, which will then take us all the way down to levels closer to 21,500. Until then, the market is trying its level best not to break the levels of 22,000. If you look at even an intraday chart, we've kind of gone there a couple of times and we continue to bounce from there. But the real closure would really be a level below 21,900 on closing basis. That will really take us to the next leg in this bear rally.
All right. So that's about the levels that you've given on the Nifty. What do you say the downside could be from current levels if it does not cross the upside hurdles that you're talking about?
No, so I will still work with the current levels that I'm not going to be predicting shorts or talking about shorts until we really don't disrespect the lows of 21,900. Until then, in fact, I would like to utilize this option to try and get some of the short-term buys, because now we are looking at a very favorable risk reward. You're only about 100, 150 points above that 21,900. But on the upside, you can go all the way to 22,200, 22,300 if we get a bounce from here.
Okay. And individual stocks?
Well, seeing some kind of a bump on pharma names, working with two of them. The first one is on a Lupin for a target of 1640, stop loss of 1590. So 1575 to 1590 was a support area from this for this stock, and we bounced from there. We can see a short-term target of 1640. The second one is on a Cipla for a target of 1410, stop loss 1360. 1350 was a support level from where we have respected and bounced. We can expect a short-term bounce to achieve 1410 and go up to 1440 as well.
Okay, since you're talking about Nifty stocks, just a quick word on Hero Moto. That one has done very well this week. It's up 18% right now on a week-to-date basis. Any further upside and target price there?
So Hero Moto, while we speak right now, is about 4,900, and we are almost at the current resistance level. We can see some kind of an upside maybe to 4960, 4970. But those are the levels we would like to be a little cautious because a turnaround could happen from there.
All right. Thanks a lot, Manish, as always, for joining in and giving us your views on the index and a lot of individual stocks as well. Maybe current levels are closer to the bottom than, they are to looking at further selling. That's the view coming in from Manish right now. Take a short break, come back. We'll talk about individual stocks. Bhaskar Babu Ramchandran, who's the MD and CEO at Suryodaya Small Finance Bank, joins in to discuss their fourth quarter numbers.
Welcome back. Well, for the markets, it's stable at this point. So let's get talking about a couple of companies then. Let's talk about Suryodaya Small Finance Bank. It was a strong operational performance for the bank with strong loan growth and improvement in margins as well. Bhaskar Babu Ramchandran, who is the MD and CEO at the company, at the bank, now joins in to discuss their Q4 performance. Hi, sir. Thanks very much for joining in. Well, this quarter, what really stood out was your deposit and asset under management momentum. Your deposits, for example, were up around 50% on a year-on-year basis, 19-20% on a Q-on-Q basis, and AUM also 34% growth year-on-year. What led to this momentum, and is it sustainable? What's your guidance?
Yeah, thank you. So we had a good year last year, including a last good Q4. The reason for some of the growth is that we had invested in 17 new branches during the year, which played out in terms of adding to the disbursement and hence to the AUM. So the overall sustainable growth in our view is anywhere between around 30 to 35, given that our base is not very large, and we intend that that will be our guided growth for the next couple of years.
So just to repeat that, you're guiding for 30 to 35% growth?
Yeah, in terms of asset growth and around closer to around 40% in terms of deposit growth. Currently, our CD ratio is around 111. So it will moderate to less than 100 at the growth of 30 and 40% respectively.
Got it. 30% AUM growth with 40% deposit growth. And this AUM growth that is coming by, could you break that down further up for us? And how much will come from MFIs? How much of it will come from commercial vehicles? How much of that comes in from SBL? Because we've seen some of them actually outperform your overall portfolio. Commercial vehicle, for instance, has on a low base once again grown 100% year on year.
Yeah. So as you rightly said, it is on a low base. And the fact that it invested in all of that a couple of years back, it's a 3-year build-up which has happened in commercial vehicle. So there's a reason that we are seeing a growth. And currently our AUM still is just 10% of our overall AUM, which is at around 800 crores. The intent is to really move the mix from unsecured, secured 60-40 at this point of time, which is tilted towards unsecured, to move towards closer to 50-50. So we'll be somewhere in the range of around 45%, 55-45 during this financial year. And next year intend to go towards a 50-50 and then move it to around 50% as in terms of secured and 45 in terms of unsecured. We'll continue to be a very strong player. Yeah.
But just a follow up on that, because you are moving away from unsecured, going into secure, that would start having an impact on the yields as well, right? Because secured assets would yield lower. So what happens to your overall NIMs then?
NIMs will moderate around 10%. Currently, we are guiding for around 10 to 10.5. You're right that as we move towards more of a secured, there will be a NIM contraction, but so will be in terms of our cost of operations. So in terms of cost of operations for unsecured, it is higher. We are not moving away or reducing our focus in terms of inclusive finance. That will continue to grow at around 30%, but there will be a little higher growth. And also the fact that the other secured assets are long tenor assets, they stay in the book longer, and hence the mix will change favorably towards secure. Not because of a slowdown in our inclusive finance business, but a higher growth coming from the secured business.
Okay, correct. So net interest margin should hover around 10.5%. That's what you guided for?
10 to 10.5. That way.
10 to 10.5%. Okay, well, this quarter asset quality wasn't an issue for you all. Your slippages were just about 63 crores. It's been within that range in the past couple of quarters. But give us a sense in terms of what you are seeing when it comes to asset quality, when it comes to your rural portfolio. Any chinks in the armor?
We are predominantly a semi-urban, urban player, even in inclusive finance, not so much rural. Around 30% of our inclusive finance is rural, but 70 is more in terms of urban and semi-urban. Currently, we are not seeing any different stress than in a normalized basis, which is around closer to, as I said, around 2.5%, 3% in terms of slippages. But however, we are cautious, and hence, for the one-off events ever were to happen, we have covered our results, our entire eligible unsecured portfolio, which is income generating through a credit guarantee scheme called CGFMU. And we are covering the entire portfolio, which is eligible, not cherry picking, and intend to do that in the coming years.
What proportion do you intend to take your, low cost deposits, CASA ratio to? I mean, year on year, it's increased from what, close to around 17% to now 20%. What's your target here?
The comfortable one would be around 23 to 25, at least for this financial year. So confident that it will be closer to 23 at least. But 25 would be a good ratio. But however, the focus would also be that the CASA remains a low-cost fund, and do not really want that also to be priced anywhere closer to the FD rate.
Okay. In terms of your loan book, which is the category that you are probably the most bullish on when it going into FY25, MFI, commercial, housing loans, SBL, others?
Mortgages and commercial vehicles. Commercial vehicles obviously is going through a good cycle. So we'll have to build it very cautiously. So currently, overall, even at the industry level, the gross NPA and net NPA for commercial vehicle segment is much lower. So ours is much lower than that as we have started building the base in the recent past. So we'll be bullish, but however, cautious in terms of commercial vehicle. Mortgages, which is a business focused, mortgages will be our core growth area for this year, apart from inclusive finance.
And credit cost, would you have a number for that as well, a target?
Approximately around 2% is what we'll be comfortable with. I think it will around lesser than that.
All right. And since you're guiding for higher deposit growth, higher AUM growth, etc., at some point, would you look at also increasing your capital, maybe some sort of fundraise in the near future?
We are currently comfortable at 28.3 in terms of capital adequacy, higher than the regulated requirement of 15%. So we don't intend at this point of time for any capital raise. But however, we'll be opportunistic as and when there is any opportunity, we will. But currently, we are not considering it.
Okay. All right. So we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that is Suryodey Small Finance Bank. The stock has run up quite significantly in the past 12 months. It's up around 70% and it's doing well today up around 2%. The company is quite confident in terms of loan growth going forward. Deposit growth should be around 40% and they're expecting net interest margins to probably come in at around 10 to 10.5% in terms of guidance. So that's on that particular company. We need to take a short break, but as we do that, we have an announcement to share with you all. Our upcoming live personal finance webinar, CNBC TV18 Accelerate, will feature none other than the top market expert Nilesh Shah, MD of Kotak Mahindra AMC, who will answer all of your questions on managing your finances and also conducting a special masterclass on what not to do with your finances and the mistakes to avoid. CNBC TV18 Accelerate Personal Finance Handbook with Sonia Shenoy will also feature 3 well-known experts, and we'll dive into everything you need to know to master your finances and learn how to grow your wealth. Don't miss this chance. Join us on the 11th of May, 9 a.m. We have limited seats, so scan the QR code on your screens to register.
Market continues to hover around the 22,000 mark, a little over that with mild green, but Cipla likely to report numbers very soon at the high point of trade. So ahead of numbers, just keep an eye out on that stock. And apart from that, a lot of these mid-caps are actually now coming back in fashion. So we have IIFL Finance, which, had taken a drubbing in the earlier part of this week, still down about 1% for the week, but has recovered about 8% from the low. So IIFL has moved to the high point with a big gain. The other one which is gaining is Polycab. So it was pretty choppy. The numbers are good, no two ways about that. But there was some choppiness as soon as the numbers hit the wires. There was a bit of sell in the buy, and then now it's moved to the high point of trade. So keep an eye out on that one. And we're seeing some pickup in names like Jubilant, Ingrevia, and a bunch of these other, chemical-related companies as well. So this one's up around 4%. So keep an eye out on this. Apart from that, we're also watching out for Tata Motors ahead of its fourth quarter numbers. Sonia joins in with the key expectations on that one. Sonia.
Well, thanks a lot for that. Now, Tata Motors has been the strongest stock in the auto sector. If you look at the performance, it's up 106% in the last 1 year. It hit a record high of 1,065 on 5th of March 2024. Now, we are expecting a very strong performance this quarter. Revenue growth of 14.5% at 1.2 lakh crores is what we're looking at. EBITDA growth consolidated at 38% and profits at 7,376 crores. If you look at just JLR, Kotak put out estimates where they expect a net sales growth of 10.6%. EBITDA growth of 26% and margins to improve to 16.6% versus 14.6%. Now, JLR was very strong this time, but the India business has seen a bit of a slowdown in the commercial vehicle space. JLR volume growth was 16% year on year, but the commercial vehicle volumes in the India business went down 6% year on year, while passenger vehicles grew 15%. So mixed bag, you'd have to say, but largely because of JLR's strong performance, we are expecting an overall strong showing for Tata Motors.
Okay, and Sonia, what about Eicher Motors?
Well, Eicher Motors earnings are expected today, and let's talk about the stock first. The stock is up 30% in the past 6 months, but on the earnings itself, we are expecting a single-digit top-line growth for Eicher Motors, revenue growth of 9.7% at 4,200 odd crores, EBITDA growth of 22% and profit growth of 36%. Now, the Royal Enfield volume growth has been just 4% in this quarter because of a slowdown that we've seen in the premium segment. This is largely led by a 13% decline in the export volumes for Royal Enfield. However, for Volvo Eicher, the sequential growth will be pretty decent because of a little bit of a recovery in the commercial vehicle volumes. UBS recently upgraded Eicher Motors to a buy from a neutral, raised the target price from 4,300 to 5,000, and they talk about continuous growth in the domestic demand.
Take a short break. Thank you for that, Sonia. On the other side, we'll focus on all things commodities. Manisha Gupta joins in with Vikram Dhawan, who's the head of commodities and a fund manager at Nippon India Mutual Fund. Stay tuned.
Welcome back. Well, for Cipla, the stock is holding up steadily ahead of its numbers, up around 2.5%. Just want to point out that it's supposed to be a good quarter for Cipla. So revenue up around 9% margins at around 22.5% versus 20.5%, and profit of around 923 odd crores. So 9 to 10% growth. But like I mentioned earlier, the US business would be the key point to watch out for, considering that there could be competition in some key drugs. Remember that as of Q3, the US was up for the 15th consecutive quarter in terms of growth year on year. and it has been above $200 million in terms of sales for the US business for 4 quarters in a row. So those statistics, whether they are maintained, will be something that the street will watch out for. $228 to $230 million is what the street is estimating from the US business. Let's see whether that comes through. But now let's go across to Manisha Gupta, who joins in with the commodities update. Manisha.
Thank you for that, Ekta. Well, and joining me on the show is Vikram Dhawan. He's head commodities and fund manager at Nippon India Mutual Funds. Vikram, hi. Happy Akshaya Tritiya to you. And this is one of the avenues that the gold buying has been on the stronger side. Any trends that you're seeing, especially in this week or this month, because of Akshaya Tritiya?
Thank you, Manisha. Thanks for inviting me on your show, and happy Akshaya Tritiya to you and your viewers. I think specifically talking about Akshaya Tritiya, it happens to be a purple patch or a sweet spot in the seasonality of the gold prices. More often, obviously, I have to qualify that it also depends upon what the other factors are doing, which affect the gold prices. But I think don't be surprised if your viewers tell you that they bought gold in Akshaya Tritiya and made money, because that has been the seasonality of this market. Now, coming to the gold market per se, I think the various factors which are driving the gold prices, the two most important which stand out are the central bank buying and the Chinese buying. Now, the question is why the central banks are buying and why the Chinese are buying. First, I'll come to the Chinese, and I think it's a very stark reminder of investor behavior. The Chinese demand is actually a reminder how the investor behavior changes when the market cycles and economic cycles turn. It's from euphoria with their real estate market and equity markets has now turned into disenchantment, and they're all rushing towards gold. And I think it clearly states the long-term view on wealth creation is that you have to focus on compounding and diversification, because you can imagine that if you have to add gold to your portfolio or silver to your portfolio at current prices, it's not a very cheap proposition. So I think it's a clear indication that don't put all your eggs in one basket, because unless you're blessed to forecast the cycles in the market, turns accurately. Now, and the Chinese demand also very well, underlines the status of gold as a hedge, as a haven, as a portfolio diversifier. So I think gold story in the wealth management is alive and kicking, as the Chinese investors are, their behavior is showing.
Clearly.
Go ahead.
Yeah, I want to talk about the Indian markets really, and what are the numbers that you're seeing here, because one of the data shows that the gold ETFs have seen their first outflow in over a year. Clearly, people are encashing the kind of profits that they are sitting at, because last year, same time, the prices were around 60,000. We're looking at 70 and 73,000 right now. How have the funds been? What would you want to say about the ETFs right now, especially in India?
So I think if you talk about, we would like to see over a period of a year or 1 to 3 years, because you can have shuffling of portfolios, and there could be some tactical calls which are being, put in and taken out in the market. So we won't read too much in a month or a 2 month, flows or outflows in the gold funds. But having said that, last financial year was an excellent year for gold funds and silver funds as well. And I think this year also, if you look at YTD, because the financial year is still very young, YTD also, it continues to be a very, very strong year. But I think, Manisha, unfortunately, despite all the flows that we are getting, the industry is getting, the flows into gold ETF is still just 3 to 4% of the total gold market. So which means that still today, 96, 97% or even higher is still being bought in physical term. So I think there we need to have we need to have change in policies and mindsets and regulation to encourage the financialization of gold, because there's no point shoving gold bars under your mattress and holding jewelry. You do that also, but I think the Indian ETF, gold ETF flows can be much larger than what they are right now.
Clearly. I also want to talk about your Nippon performance in the last 1 year. What kind of returns have you yielded for your investors? That perhaps would be a push for people to start investing in financialization of gold rather than in physical.
So obviously, I mean, we can't tell you exact numbers because, but that's for the the investors to see on our website or on the fact sheets. But I think if you look at gold in INR terms, in past 10 to 15 years, it's given somewhere between the debt return and the equity return, which sort of suits the the investment objective, or especially those investors which are using capital market for wealth creation. It suit, and obviously the gold being one of the better solutions to diversify your portfolio. So I think it sits very well in terms of how it has performed, both in terms of returns and how it has protected the portfolios.
Vikram, what's your sense from here on? Because the global ETFs have not done so well. We've seen constant redemption coming in for that. Has India stood in contrast of that?
Oh, absolutely. I think the world is divided into two spheres. You have the Americans, which obviously for the way their markets are doing, the way the economy is doing, they have incentive to take more risks. But rest of the world is mostly net positive, and I think Indian investors have done very well and very well positioned themselves into this rally. Whether it is the physical demand or whether it is the flows into ETFs in the past 1.5 years, when the rally actually started picking up steam, they have done pretty well. But looking ahead, I think two points stand out. One is the central bank buying, and why we have to understand why it is happening. I mean, central banks have run down their dollar holdings by 12 to 13% in the past 20 years, and it continues to accelerate. I mean, China brought down its treasury holding by $350 to $400 billion in 2 to 3 years, and that's because of inconsistency in the monetary and the foreign policy of the US, which is not only a headache for the central banks, but it is also a headache for the government, of the day. So I think that theme will continue as far as the central bank buying is concerned. But I think most important event, obviously, for the Indian investor, it is the Indian election, which is unfolding, is also a very important event because it might affect the rupee, rate. But I think going ahead towards the end of the year, you have the US elections coming up, and if you see the past 20 years data or past 4 or 5 elections, gold tends to do well in the run-up to the US president election. And this time, I think probably the stakes are very high. So I think you might be probably seeing that kind of rally building up at this point of time. But having said that, a word of cautions, there are a lot of hedge funds, a lot of momentum funds which have piled into gold. So at some point, profit taking will happen. So it may not be as smooth a ride as investors are expecting.
Okay, I have a final question then, Vikram. What's your own sense really on where the gold prices are headed? Because most of the reports are still suggesting that this is a correction, whatever we are seeing from its all-time highs, but we still have more and further and higher highs to make from here.
So I think I'm very encouraged by the behavior of the Chinese investors. I think the Bitcoin story is behind us, and I think people don't realize the more mainstream Bitcoin becomes, the better it is for gold, because you have to remember when the lights go out, the gold bar still remains the gold bar, but Bitcoin is and I don't want to say too much about what Bitcoin has done. So I think the gold story has actually become bigger and stronger, whether it is as a hedge or as a haven, or even for the tactical investors also. So I think that, and along with the central bank buying, which perhaps seems to be happening at least in the foreseeable future, I think it's a good development for gold, and you never know, it can be another good year for gold also. Yet another good year for gold.
Okay, all right, Manisha, as well as Mr. Dhawan, I'm sure we all are hoping for that as well in terms of the equity markets. But thanks very much for joining in and giving us that perspective on gold. India's love for gold continues, and especially on an auspicious day like today. But let's move on now. Earlier today, we did speak to Devina Mehra, founder and chairperson at First Global, to discuss her views on the sector that she is betting on. Listen in to excerpts from that conversation.
Things have not changed from there. Industrials and capital goods, just to remind you, we've been overweight since October 2021, whereas most people started talking about it only last year. Where we added more recently have been some commodities, metals and cement. Though, I mean, we're not overweight there, but earlier we had very little there, so we've added some there. Most latest addition has been a bank where we still, I mean, banking as a whole, we still remain underweight, but after a bad phase, it's not looking quite so bad anymore. So some of the stocks are beginning to look a little better than they used to. Just as, I mean, we are now watching IT, that sometime this year, I think that will bottom out and that will give a good buying opportunity.
Okay, and on that note, it's a wrap on Halftime Report. Business Lunch will take all of the action forward. Stay tuned.